Welcome back to Just Get Realty, where we talk all things real estate, wealth, and financial health. My name's Felicia, a Toronto realtor and a homeowner on a house hacking journey. If you're new to real estate or on your journey towards home ownership, this is the channel for you. So hit that subscribe button and let's get into it. Today, we'll be discussing credit and what you can do to improve it. So why does your credit matter? Well, your credit is a part of your financial health, and lenders use your credit information to determine your credit worthiness. They want to know the level of risk involved in giving you a loan. So your credit can range from poor to excellent. And if you're serious about home ownership, you're going to want to aim for a credit score of at least 680. I'm not saying anything under 680 won't get you approved for a mortgage loan or any other loan for that matter. But if you are at 680, it puts you in the good range and you're more likely to be approved. Also, if you do get approved for a loan and you're on the lower end of the rating scale, you're more likely to be hit with higher interest rates, which is going to cost you more in the long run. So it's just worth it for you to aim and to work towards having a higher credit score in that good to excellent range. So I'm going to discuss 2 tips for those of you who are building your credit from scratch, and then I'm going to discuss 5 factors that the credit bureaus use when determining your credit rating. So starting from scratch, no credit is better than poor credit, but no credit isn't good enough. And I'll use myself as an example. When I got serious about wanting to buy a house, the first thing I did was speak with a financial advisor, and he asked me what my credit was like. At the time, my credit report had consisted of a student loan and a cell phone bill. I was renting an apartment. I didn't have a credit card. I had tried to apply for credit cards prior, but I was always denied. It didn't matter what credit card company or what limit I was applying for, I was always denied. So if that sounds like you, someone who applies for cards and you just can't get approved, this first tip is for you. Get a cosigner. If you have a close family member or a close friend who believes in you and trusts you and is willing to co-sign on a credit card or a line of credit, more power to you. That is definitely going to help you get your foot in the door and start building that credit under your name. At the time, I didn't actually have anyone who was willing or able to co-sign on a credit account for me. So what I did was I applied for a secured credit card, and that's tip number 2. Secured credit cards basically mean they give you a credit card that is backed by a security deposit. So when I applied for mine, they determined that I was eligible for a $500 credit limit on the basis that I provided them with a $500 security deposit. So basically what that meant was if I used my card and I racked up a balance and I didn't pay that balance back, they would take that money from the security deposit that I provided them. Now, obviously, if you're starting from scratch and you're trying to build your credit, you don't want to start off by making late payments. You want to start building those good habits from the beginning. So in my case, I would just make small purchases. I would pay for my cell phone bill. I would buy groceries. I always made sure that if I was using my credit card, I had the money in my checking account to transfer over and pay that balance right away. I didn't even wait for the due date. I would just pay it right away, keep my balance at 0 at all times. So after about a year, they gave me my security deposit back and they increased my limit to $1,000. So at that point, it was no longer a secured credit card. It was just a card with a limit of $1,000. After 2 years of good behavior, they increased my credit to $5,000. And at that point, I started to get pre-approved offers from other credit card companies. It was basically like, hey, Felicia, you are pre-approved for X amount of dollars. Do you want to accept this offer? And of course I did, because I wanted to increase my credit limit, my credit amount. So a secured credit card is an awesome way. The way they advertise it is you're almost always approved. So even if you have poor credit and you want to rebuild your credit, a secured credit card might be the avenue for you. Just so you know, I'm no credit specialist. I'm not a financial advisor. I'm just giving you tips based on my own experience and based on the experience of friends, family, and clients that I've worked with. So let's talk about the 5 factors that impact your credit rating. There are 2 major credit bureaus, Equifax and TransUnion, and they use these 5 factors to determine your credit score. So I'm going to discuss the factors from the most impactful to the least impactful. So starting with factor 1, payment history. This is all about paying your bills on time. When you have past due balances on any of your credit accounts or a loan or a cell phone bill, that all shows up under your credit report, and it impacts your score negatively, and it impacts it in a very big way. So you want to make sure that you're paying your bills on time, or better yet, make sure you're paying them early. Other things that impact your payment history is something like being sent to collections or declaring bankruptcy. Something like bankruptcy would stay on your credit file for about 6 to 7 years, so you really want to avoid getting to that point. If you've already passed that threshold, there's still hope. You can still turn your credit history around. It's just going to take time, and you should probably speak with a financial advisor or a credit specialist to help you take the right steps to work your way back up. Okay, so factor number 2 is credit utilization. So the rule of thumb is you shouldn't be using any more than 35% of your available credit. So your available credit is basically just all of your credit accounts added together. So let's say you had 2 credit cards and they both had a limit of $500. Your total available credit would be $1,000, and you wouldn't want to use more than $350 at any time. So what happens is the credit bureaus will review your credit accounts monthly, and that could be at the beginning of the month, the middle of the month, or the end of the month, and they're going to see what your credit utilization is. When it's over that 35% threshold, it will start to impact your credit account negatively, or your credit score negatively. So even if you have to make a bigger purchase that might take you over that 35%, it's really important to try to pay that back right away or pay it back soon after. Sometimes it doesn't even make sense to wait for the due date of your bill. Just pay it back. Bring that balance down. Make sure you keep that under the 35% threshold. Factor number 3 would be length of credit history. So how long have all of your credit accounts been open? I think how they do it is they take all of your credit accounts and they average it together for, the lifespan of your credit. And usually when you pull your credit account, it will show you the oldest credit file that you have. So pro tip, if you have an older credit account that you've paid off and you don't really use anymore, you should leave it open. Use it once in a while, maybe just to make small purchases, just to keep it active, but don't close the actual account, because that will impact the length of your credit history. You might lose all those years that you put into that credit account in your overall calculation of credit, the length of credit history. So keep all of your accounts open if possible, and that is going to help you get a better credit score. So factor number 4 is inquiries. How many times and in what time period are you applying for different types of credit accounts? So that could be credit cards, line of credit, loans. The more credit accounts that you apply for in a short period of time, it kind of makes a lender and the credit bureaus, step back and think like, why is this person applying for so many credit cards in such a short period of time? Are they desperate for money? What's going on? So it kind of raised some eyebrows. So you want to avoid applying for too many things at once. Kind of spread that out. You don't need to apply for 3 different credit cards in a week. It's not going to help your overall credit score. Even though it's a smaller impact on your credit score, it still counts towards it. And factor number 5 would be credit mix. So what type of credit accounts do you have? A credit card, a loan, a line of credit, You don't want it to be too diversified, but you want to have a couple of different types of credit accounts on there just to show that you are responsible, that you can manage different types of money in different types of form, and you can keep it all in good standing. So those are the 5 factors that impact your credit score, and by understanding those and knowing those, it will help you build your credit, it will help you improve your credit, it will help you maintain your credit. So I think the last takeaway that I want to give you guys is review your credit report on a regular basis. And when I say regular, I mean an annual basis. Doing that is really important because you want to make sure that all the information is up to date. Your information on your past addresses, on your current and past employment, on all of your credit accounts. By looking at your credit report, you're able to see if there's been any fraud under your name. If there's any discrepancies, you're able to fix those discrepancies, reach out to the credit bureaus and get them to fix any discrepancies that are on there. Because when it comes time to get a loan or get an apartment or anything like that, those discrepancies could impact you and it could stop you from actually being approved. So it's best to get those discrepancies fixed right away. And I think I've said discrepancies about 30 times in the last 30 seconds. I'm sorry. So that's my last takeaway for you guys. If you enjoyed this video, be sure to give it a thumbs up. Share it with anybody who might find the information useful. If you have any questions, be sure to put it in the comment box below. And I guess I'll see you guys next time. And until then, design your freedom, invest in your future, and just get realty.